Check the question and give me the answer if possible. Check the question and give me the answer if possible. In accordance with IFRS IS 16, okay, in IS 36, impairment of assets, which of the following explain the impairment of asset and how to calculate recoverable amount? What is the rule of impairment? What is the rule of impairment? Carrying amount is 20,000. Net realized, is it right? Carrying amount is 20,000. What is the formula for when the value of the asset will be get impaired? An asset is impaired when carrying amount exceeds its recoverable amount, and recoverable amount is higher of its fair value, less cost to sell of disposal. I will put the same one what we have done. Is that I will put the same if you remember the things. Okay, what it say? Carrying amount. Is that carrying amount exceeds recoverable amount? Is that carrying amount exceeds recoverable amount? Carrying amount is 15,000. Recoverable amount is 12,000. Is that? Go with the step. And its recoverable amount is higher than the fair value. Is the recoverable fair value is how much? Fair value. Fair value is high. Recoverable amount is higher. Fair value is going to be, take fair value is going to be 11,000. Fair value is going to be 11,000. Fine. Now, carrying amount is more. Recoverable amount is less. Recoverable amount is more than the fair value less cost to disposal. If that is the case, recoverable amount is less. How much you are going to get a decrease in value? Decrease in value is how much? 3,000. Decrease in value is how much? 3,000. Now almost we are covering IS 36. An asset is impaired when the recoverable amount exceeds carrying amount. Carrying amount is how much? See, carrying amount is how much? Here we are saying carrying amount is 15,000. But recoverable amount is how much? Recoverable amount is 17,000. It is more. Is it carrying recoverable amount is more? Is it right? Then it is a gain. Yeah. It is not a loss. Yeah. An asset is impaired when the recoverable amount exceeds the carrying amount, and the recoverable amount is higher. No, if it will have a positive value. Is it? An asset is impaired when carrying amount exceeds its recoverable amount and the recoverable amount is lower of its fair value. Is that carrying amount is how much? 15,000. Point number D, 15,000. Recoverable amount is lower of the fair value. Recoverable amount is 10,000. Okay, this is the recoverable amount. Is the lower of its fair value, and amount is the lower of its fair value. Is that means recoverable amount is lower, fair value is
More.
more.
2000, no?
2000, is it? Now what happens
Hmm.
if that is the case? Which one we have to take? See, point number 2 is not. Point number 3 is not. It exceeding. Reason is there. Is that it exceeds carrying amount. It exceeds the carrying amount. Is it? Now, out of 1 and 4, which one is the right option?
1.
Because it sat, this is the rule
Talks
of
about
IS
impairment, right?
36. Is it? This is the rule of IS 36 in accordance. Is in accordance to that. Fine.
Yeah.
Next. Prior to considering any impairment, what is the carrying amount? They gave you the scenario, is it right? They gave us the scenario. Is it? They gave us the scenario. Period to the any impairment. What is the carrying amount? Telepath, plant, and the balance of revaluation surplus. Is it? Revaluation surplus. Fine. Now, we have to see that. Telepath has year end 30th September owns a item of plant which uses to produce fur. The plant cost is how much? 750
750.
on October. See 110 20,000. How much is there? 750.
50.
Has estimated useful life is how much? Life is going to be 5
5.
years.
5 years.
A review of plant on 1st April 2003. Is that 1st April 2003? They say that what is the fair value? The fair value is 560. But what is the life? There is a remaining life of 3.5 years. There is a remaining life of how many years? 3.5 years, and its fair value is 5. They want to revalue the non-current assets at fair value, but does not make an annual transfer from revaluation to retained earnings. They have the policy of revaluation. Is it right? They have the policy of revaluation. Fine. Now, they have the policy of revaluation. Fine. They have given all the things. What they are asking us, what will be the revaluation surplus on 30th of September 2003? 30th of September 2003. Two and a half years, how many years are over? How many years are over? From 110, how many years are over? 110 to 30th 9201. 30th 9202. How many years are over? 2.5 years are over. Check. Yes or no? I will write very clearly. Okay, I will write very clearly here. See the thing, they have purchased on 110/2000 to 110/2000. Is it 110/2000 to 30th 39/2001? 110/2001 to 39/2002. Is it 110/2002? They said that when they have revalued, they valued on 1/4/2003. How many years are over? 2.5 years over. Okay, 2.5 years are completed. Is it 2.5 years are completed? 2.5 years completed. How much is the depreciation for that?
750.
2.5 years are completed. How much
Divide.
depreciation is there?
Yeah.
750 divided by 5 years
5 year
time
and
2.5.
2.5.
How much you will get?
37,500.
375. Depreciation for 2.5 years, 2.5 years.
Yeah.
Okay, depreciation for how many years? 2.5 years. Okay, now depreciation is how much? 2.5 years. Now how much they have the revaluation? How many years are left now? They are saying that 3.5 years are left. Fair value is how
Yes.
much?
560.
560. Okay, 3.5 years are left. 560.
Fair value same like evaluation.
Yes, is that?
Same.
Whenever, see, yes, tell me.
Yeah. Just I want to make
Whenever you do revaluation, we have to calculate depreciation on the revalued amount. Okay?
Yeah.
Whenever you are doing revaluation, depreciation on revalued amount. How much is there? They have done how much? 560. Is it right? They have done how much? 560. Is that? Now they have done 560 till 30th September 2003. From when? 1/4/2003 to 30th 1/4/2003 to 30th September 2003. How many months? 6 months. How many months? 6 months. How many years are left over? 3.5 years into 6 months. Okay, into 6 by 12 months. We have to calculate only for 6 months. How much you will get?
80,000.
How much?
80,000.
560.
Yeah, 80,000. 560
560
divided by
divided by
3.5.
3.5.
What's the top? 80,000.
80,000. One 4/2003. How much is the revalue? How much is the revalue? Revaluation is 560. Depreciation for 6 months. How much?
80.
80.
80.
000 084. This is value as on 30th September 2003. Is it okay?
Yeah, one question, doctor. When it's can you show me the line when they requested to calculate till 39 for 6 months in the question?
Huh. Now, good. They said that, see, when they have done review,
Yeah, on 1st April.
1st April. Okay, when they have done review, they have done review on 1st April. Okay, they have done review. And when they are asking us, they are asking us on,
Oh, okay. And the question. Okay. Yeah.
okay, where they are asking us how much? Now, what is the carrying amount now?
480.
480. There are two 480s are there, okay? Two 480s are there, fine? Now,
Revaluation nil.
how revaluation surplus nil? How revaluation surplus nil? How much is the depreciation?
There is a yes, there is a balance.
How much is the depreciation?
Let me give me a second. 80. Yes.
See the things. Is it right? See the things. I am writing here, okay? Revaluation surplus. Is it right? Revalue amount. Revalued amount. How much is the revalued amount? Revalued amount as on 1st April. Is it right? Revalued amount as on 1st April. How much is the revalued amount?
560.
560. Is it right? Revalued amount is how much? 560. How much is the carrying amount?
750.
How much is the carrying amount? Carrying amount will be how much?
750.
No, carrying amount is how much? Carrying amount is
375
750 minus 375. Depreciation. How much is the carrying amount?
375.
375. How much is the carrying amount? Minus carrying amount.
56.
How minus carrying amount? How much? 375. What is the difference?
185.
180.
Yeah, see.
Is it okay?
Yes, doctor.
What is the, can we do next one?
Yes.
What is the value in use? What is value in
use.
is it what is value in use of plant? Okay, of plant. What is the value in use of the plant as at 30th September 2003? Is it as at 30th? What is the how we are calculate value in use? Any idea? How we calculate value in use? Any idea? See what they have mentioned. See the things. These are the discount factors. Okay, these are the discount factors. They say that what is the cash flow on 30th September. Okay, on 30th. See, I will put like this for your convenience. Okay, this is for question number 16. Is it right? This is for question number 17. Okay, this is for question number 17. They have said, okay, they have said what is the value in use year end September. They are informed that major customer that it will no longer placing orders with Telebad. They have a revised estimated net cash inflows for the next 3 years. Is that next value in is nothing but what is the future cash flows? What is the future cash flows? We have to calculate at the present value. Understand point? Value in is nothing but the what is the future cash flows in the present value. They have mentioned here what is the net cash flows in the coming next 3 years. 220, 220, 180 and this much. Okay. At the rate of how much? They say at the rate of 10%. Is it right? At the rate of 10%. I will do here only. Okay. Is it right? At the how much? The first one is 220, the second one is 180, the third one is how much? 200. Is that the third one is how much? 200. 0.91, 0.83, 0.71. Is that 0.91, 0.83, 0.75. Multiply it, how much you will get?
200.
200. Take the decimals also.
Okay.
220 times 0.91. 220 times 0.91. 200.2. Okay. 180 times 0.83. Okay,
yeah.
149.4. 200 times 0.75. 150.
150.
Total how much?
$499.6.
Answer is
B, C. Can you go again, doctor, to the question? I just want to the part. Yeah. Yeah, okay, doctor. Yeah.
which of the following are true in accordance with IS 36? You have any idea about cash generating units?
We have idea, but we forgotten.
How? Cash generate unit is the smallest unit in the entity, smallest unit in the entity. Is that it is a cash generated unit. Okay, is right, it is a cash generated unit. When you are talking about the cash generated unit, we have done calculations. If there is a loss, the first what you will do, you will write off goodwill. Is that you will write off whatever the loss. Okay, next your current assets values will remain same. Your current assets value will remain other whatever with but loss. Is it right? It should be, I'm using the same words. It should be shared on a pro rata basis. Proportionally. Pro rata means proportionally. Understand? Pro rata means it will be done proportionally. Fine. Now we will do it in the next question. Okay, we will do the same thing in the next question. Fine. Now what they are saying, a cash generated unit is the smallest identifiable group. Now I told you here what are the conditions. The same conditions apply. If you don't remember, at least see, this is the stage where we are covering randomly from a question paper point of view on the topic everywhere. That is the reason I told you that revise, complete revision has to be there. And whatever we have done, we should not forget that. That's very important. It is the smallest identifiable group of assets for which individual's cash can be, it is right. When considering impairment of cash generated unit, the calculation of carrying amount and recoverable amount does not need to be based exactly on the same group of assets. No, does it needs, okay? It needs to be based. You cannot say that, you cannot take, if it is goodwill, you will take goodwill. If it is brand, you will take brand. If it is land, you will take land. You cannot say that land, you will take land to plant and machinery. You are taking land to some investments. No, we cannot take. You have to calculate in the same category. You cannot mismatch. Is it? You cannot mismatch. When it is not possible to calculate recoverable amount the single asset, then cash generated unit should be measured instead. Is that when you are not going to calculate for a, when it is not possible to calculate the recoverable amount. Sometimes what happen, it's not possible to calculate the recoverable amount. Zero will be there. Is it right? Of a single asset. Then cash generated unit should be measured. How much proportionately? What we are doing? We are working on a pro rata basis. This is right. Okay, this, see, you refer cash generated units, all 2 points are there. Answer is
1, 3.
At least take your time, and I'm telling you, take your time, randomly revise. Randomly, we will do the questions randomly. Okay, we will do the questions randomly. Is it right? We are not going to make. Now, whenever you want to stop, you tell stop, but don't tell stop now. Okay? What is the carrying amount of RILDA plant 30th September after the impairment loss correctly allocated to assets? Select your answer. Is it right? They have mentioned here in the question. How much is there? Goodwill is 2 million. Factory building is 4 million. Plant is 3.5 and receivables is how much? 2.5. Is right? Receivables is how much? 2.5. Now, how much is the impairment loss? They say that there is impairment of how much? 3.5. There is a first goodwill will become zero straight away.
Yes.
Goodwill will
Yeah.
become straight. There is no doubt. Current assets was say will remain same.
Will be
Is it
same.
right?
Yeah.
These 3.5 should be distributed with this asset. What is the total of this?
705.
7,500,000.
Yeah. Yeah. Yeah.
Is it right? 7,500,000. Fine. Now, same thing we have to do. Okay. Same thing we have to work it out. Okay. Just keep me posted about 2,000,004 3.52. Okay. Just remember those values and help me. Is it right? What will happen? See, you will have goodwill. Is it right? You have goodwill. How much is goodwill? You have to write. Okay. Carrying amount. Carrying amount. Okay, how much is the goodwill? 2 million. Is that carrying amount? What is the property? Property is going to be 4 million. Plant is how much? Plant is going to be 3.5. And cash and receivables are how much? Cash and receivables is 2.5. How much is the impairment loss? Impairment loss is 3.5. How much is the impairment loss? Impairment loss is 3.5. Now, is that impairment loss is how much? 3.5.
Yes.
Fine. How much we are going to straight away? What will happen? Straight away it will affect goodwill. Cash will not have any impairment loss. Okay, cash will not
Zero,
have
yeah.
any impairment loss. This is carrying amount before. Is it right? This is carrying amount before. This is carrying amount after. Is that carrying amount after? Now what happens? Here the carrying amount is nothing. Already how much you have deducted
Zero.
loss? This much. Okay?
Full.
Now here the amount will remain same, 2.5. Okay? Current assets value will never change. Okay? How much is the balance is there? It is the balance is how much? The balance is 1.5. The total is how much? The total is 7.5.
1 million. Yeah.
Okay, the total is 7.5. Now, share of property. Is there share of property? How much is there? 4 million. 4 million divided by 7.5 times 1.5. How much you will get?
Seven nine 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 nine.
Make it 8.
Yeah, 8.
And how much you'll get? 3,500. 3,500 divided by 7,500 into 150. How much you'll get? Are you clear about this?
Yeah.
4 minus 8, it comes to how much? 4 minus 8, it comes to 3,200. 3.5, it comes to how much? 2,800. What they are asking us? They are asking us what is the carrying amount of the plant. Is it? What is the carrying amount of the plant? What is that carrying amount of the plant? Answer is
Yeah. Cool. This is called cash generating.
yes. In the cash generated unit, they are asking about what is the value of plant. In the what is the carrying amount of the plant after the impairment loss. Is it okay?
Yes. Doctor. We did it, I remember, but in another way.
No, we did in the same way.
Then we split it down one by one.
Huh? Fine.
Yeah.
We split it up. No, we have not changed. We did it in
Yeah.
this.
Finally same, yeah. But the
Final.
way, that's why.
Way
Yeah.
maybe same, maybe somewhat different. Maybe it happens. Okay.
Yes, yes, yes.
You have patience to continue.
I don't know the others.